how much cash, because cash is king, right? I mean, in the accounting world, you can have earnings, but earnings are not cash. That's an accounting term. Earnings is an accounting term. What really matters is cash, right? That's what you pay the bills with. You don't pay the bills with paper earnings. Hey everyone, welcome back to Make More. I'm Matt Hesson. I'm your host. I'm here with my friend Steven today. We're doing a follow-up podcast for you to give you more information for your use and your intelligent decision making. Steven, how you doing?
Good morning, Matt. Thanks for having me back. I'm excited. I have a lot more questions. I was just telling you earlier, my wife listened to the podcast and she found it really helpful. So, she's really excited to keep listening. She asked me to give you a couple of questions.
No.
I think they'll be easy ones.
Good. Hopefully something that will be insightful for you.
Yeah, definitely.
Good help.
Definitely. Yeah, so I have a bunch of, questions from my wife and also myself. So, but yeah, how's your week going?
You know what? It's great. Had a wonderful weekend. It's just been wonderful. The weather's been a little bit iffy, as you know. Huge snowstorms up north and rain down here. And but the week's been off to a good start. Last weekend was a little bit misty outside, so we didn't do too much.
Yeah.
So we got a lot of rest in. But I'm excited to be here with you. I'm excited.
Awesome.
Engage in some dialogue and see if we can't get some fun things out there for our listeners to learn from.
Yeah, definitely. Well, I have some kind of a separate topic of what we discussed last week, but I do want to quickly follow up from what we talked about last week. Particularly, a question my wife asked was, we were talking about buying stocks and what stocks to purchase. And she brought up a question, she was like, I don't even know where to start, like if I wanted to buy a stock. So she got really inspired by the podcast. She started, I was telling you earlier, she was looking up different stocks to, research and things that she finds value and that means something to her. But she was like, but where do I buy them, right? She remembers listening where you had mentioned setting up an account with like Charles Schwab or something. So I think maybe for our listeners, a good, maybe topic to cover real quick would be, where does somebody start if they want to start buying stocks? How should they go about it?
So it's very simple. It's not complicated. They make it so easy today. They want you in the market. They want your money. So they make a Robinhood app. It was a great one. I mean, there's E-Trade, there's Schwab. You can just download the app and you can get started, fund the account, and literally get started. Before the beginning of the podcast, you were talking about one of the stocks that she likes in particular. Mm-hmm. Let's talk a little bit about that one.
Yeah, so we, and just kind of, it's been a popular one. And the reason we got into it was started looking at what stocks have been performing really well, particularly over the last 3 years. And the stock is e.l.f. It's e.l.f. Cosmetics. And I believe, last I checked, it's next to NVIDIA. It's one of the fastest growing. But my wife uses the product.
What is the product?
They're cosmetic. It's a cosmetic line, right? So women's cosmetics. And so she uses it. So she loved that. That was a product that she thinks it's a really great product. It looks like they have very good responsible marketing. So that's something she was into, and so I kind of, let's talk about that. You brought up, comparing the buying price, the PE. So maybe explain that a little more.
First of all, I love the idea that she picked a product and a stock that she believes in, that she uses. And that's what we were talking about last time, along the lines of ESG and whatnot. It's just really about finding companies that you believe in. Mm-hmm. And she literally found something that she believes in and uses. That's the key indicator right there. Is it going to have sales?
Yeah.
If she's a buyer of that product, then probably all her peers are buyers of the product. It probably has a good long run life. So let's talk about how to look at that stock from a value perspective. We talked a little bit about PE ratios, price earnings ratios, and literally the price per share divided by the earnings per share will give you that PE ratio. And the higher that ratio is, the more you're paying for it, the more expensive it is. Okay. So, one of the things that we would want to do is take a look at, what's the age of the company? How long has it been around? That's important. What's their history been? What are their sales growth been? What has their earnings growth been? And that's all information you can find on E-Trade, Schwab platform. You can go in and do it on, like we talked about last time, going out and using Yahoo Finance, and you can just type in the ticker symbol and you can get all that data. And what we want to do is make sure that the earnings is growing faster than the PE ratio is. So if the earnings is at 30, growing at 30% a year, and the PE is at 17, buy that thing. But if it's inverted, we may want to think twice about it. So that's really important. Looking at the company from a consumer perspective is important. Since she's buying it and her friends are buying it, likely it's a good product. And I think that's key when you're buying a consumer item, a consumer stock, a consumer goods stock in particular.
Okay, awesome. All right, so yeah, absolutely. I think, and that's a good point, because when I think about buying stocks, or we've talked about it or see a lot of info, you hear or see a lot of stuff, it's like, okay, is the stock growing? A lot of people don't talk about the PE ratio, right? I had never even heard of that until the podcast we did last week. So I think that's extremely, valuable information.
Well, what's interesting is I remember in the 90s in the dot-com crash, you were probably too young to remember that, but it was literally all these companies were just running rampant. The prices were growing at huge, huge levels, and there were no earnings in the companies. They had no earnings. And so I think I mentioned this last time, I had built an equity model, and I was tracking 100 stocks. And so at the end of each day, it would evaluate whether it was a buy, sell, or hold, or not buy.
Mm-hmm.
And for about 3 years, every single one of those stocks said, don't buy, don't buy, don't buy. And everybody kept telling me, you're missing the new economy, bro. You're missing the new economy. I'm like, I'm sticking true to my methods.
Yeah.
I know I'm missing it on the way up, but you guys, when this thing falls apart because there's no earnings, that's the basis for every stock's value is its earnings. How much earnings growth is there? And you know what, Stephen? The whole .com just crashed. Everybody lost everything. I made 12% per year. I just stayed true to my discipline, and that's really critical. So earnings matter. If somebody tells you earnings don't matter, run. Because eventually it's going to matter. Like gravity matters. What goes up comes down. So it really matters.
That's awesome. I mean, yeah, everything, time is told, statistics tell, data speaks a lot, and
sure.
Kind of speaking of that, and maybe something I want to bring up, and I don't know if we want to talk about this on a different time, but kind of relating to that, you're talking about you're going to miss this wave. You want to talk real quick about what happened with the GameStop stock?
I don't. But that was another instance, right, where that stock just skyrocketed.
Mm-hmm.
And it was FOMO. I have fear of missing out.
Yeah.
I don't want to miss out, so I'm going to get in. And it's almost like everybody's looking for you got chairs on the Titanic, and there's only 11 chairs, but there's 13 people needing a chair, and so you're hoping that you have a chair at the end of the day, and 2 people are going to be without a chair. That's the greater fool theory, So when stocks are running and they have no earnings, and people, it's just all media hype, and the stocks run, get out of there. I mean, I'll give you an example. Like Bitcoin right now is back to 63,000.
Yeah.
I have some crypto in my portfolio because of FOMO. I don't want to miss out, but I don't necessarily believe in it.
Mm-hmm.
Because I don't understand how you can just create a currency that really transitions itself into value for the consumer and for the country. I don't understand how that works. And so I don't buy things I don't understand. I'm more like a Warren Buffett investor.
Mm-hmm.
I buy things I understand. And that goes back to your wife. She's buying a stock she understands.
Yeah.
Good for her. That's the way to do it.
Awesome. Yeah. Thank you, Matt. All right. So I know we talked about stocks last time, so I just that was quickly to follow up where we were last. But I think something we should probably get into is and really building wealth, I think is building a business for yourself, right? So
Yes.
what is the transition or the movements, the structure, what you should be doing to transition out of that corporate world into your own business, starting your own business?
Okay, so let me give you a little bit of background. So I started in the corporate world at a Fortune 700 company right out of college, and I worked there 14 years, and I was miserable. I just, I got to the top of the organization at the board level. I was an executive with the company, and the company was a public company on the New York Stock Exchange. And, the whole thing about, like I talked about earlier, earnings, they would try to make earnings because they were a public company and they wanted their stock price to grow so they could all get rich and sell their stock. Well, that's great, but the problem is they didn't have a good business model. So what they would do is they would raise the prices on the customers just before the earnings report came out so that they could show sales growth. Well, you can't only do that one or two times, the customers will leave you and then you're dead.
Yeah.
So I was there, the vice president of real estate worldwide, and I decided one day, just my soul wasn't into it. My spirit wasn't into it. It was like, I'm dying. I'm doing the 10th variation of the quarterly budget. I'm doing human resource reviews for dozens of employees. And that's just not what I'm a deal junkie. So for me, that's not what I wanted to do. So I resigned my position. There's a whole story behind that. But I resigned my position and decided to start a development company. I would tell everybody, don't do it the way I did it. The way I did it was it was crazy. So I was making probably $200,000-$300,000 a year.
At your job. At my full-time job.
Yeah, plus bonus.
Mm-hmm.
So, and I had two young daughters, a wife, a mortgage, and I decided to just quit my job. So I was literally taking a leak, and the president of the company standing next to me. I lean over and go, I quit. I can't do this anymore. And he goes, you're going to quit in the bathroom? I go, I just can't do this anymore. So I resigned from the company, and it was like scary as shit.
Yeah, because the fear's got to start kicking in.
Oh,
what are you going to do?
Well, it didn't kick in until I literally got home.
And told your wife?
I told my wife, I quit my job today. You did what? I'm like, yeah, I quit my job. And she goes, well, do we have any savings? No. Do we have any income coming in? No. She's like, are you out of your mind? And I'm like, well, honey, I can't do it. So what I did was I started a development company because I saw how the real estate developers were building for my company, making a ton of money. And I learned the process watching them. So I knew I could do it. And I literally started my company, and I got my first opportunity through a very large multinational company to buy 7 of their buildings, and bought the deal, closed on the deal, and literally we were on because it was the company was called Fresh and Easy, and they were coming in from Britain, and I was the first developer. So CNBC put me on 4 times on TV. I was in the Wall Street Journal, was in the Financial Times of London, was all over the world. And all of a sudden, I became this developer that everybody was sought after. It was awesome.
How quickly, before we go, I think it's an important part, how quickly did that happen from quitting your job to the execution of that deal?
About 4 years.
Okay.
Yeah. It was not quick. It was painful.
Yeah.
So thank you for pointing that out. For everybody watching out there and listening, it was not a quick transition. And when you start your business, and you probably know this from your own experience, it takes time. It just takes time and discipline and patience and capital resources so you can eat and survive. And literally every night I would get up and, for 4 years, pace my bed. My wife's snoring, sleeping like a baby, and I'm just like pacing the floor. Yeah. Like, how am I going to make this work? And then I got that opportunity, and the universe rewards you for good things you've done. I had helped a lot of people, and so we got this opportunity. And I think on that first deal we made like $37 million, and I was like, "Holy shit!"
And were you doing this by yourself, or did you have partners at this time?
I had a partner.
Okay.
Yeah, I had a partner, very, very smart partner. And that's one thing I would tell you: if you're going to start a business, only bring on a partner if A, you need it, and B, they add more value than you're bringing, at least as much. And this guy was so smart. And literally, so for the next 5 years, I think we built 40 shopping centers. And I was the guy out there making all the deals and buying all the properties and put all the deals together and jumping on the trampoline up and down. Yeah, we'll do it. Yeah, we'll do it. We'll buy this. He was the guy going, Matt, slow down. Get off the trampoline. We're going to get hurt. And he saved us. When the '08 crash hit, we didn't lose one property. We didn't lose one tenant. There were people that were billionaires that went bust. And because of him and having a good partner to counterbalance my alter ego, we survived and did well. And he and I are still awesome friends today. And we still have a lot of properties together.
That's awesome.
And you know what? He's still smarter than I am. I mean, it's just, I've had the best partners in the world. I am so blessed. I mean, all my business partners are smarter than I am, and they help us succeed. And so I don't even go to work anymore. They do all the work. I put in all the money, and it's a great partnership.
That's awesome.
Yeah.
You said you gave 2 reasons. The only reason you bring on a partner is if you absolutely need it, or if the person brings more value than you do, right?
Yeah.
So since we're on this topic, let's cover maybe a couple red flags to absolutely avoid in a potential partner, right?
Okay. So one of the things I want to tell you is first red flag is when somebody's not going to put equal money in. So big red flags. So let me tell you about my first deal I did. The first deal I did was out in Riverside County, California. And this developer came to me and said, look, I'm out of time on my escrow. Can you come in as a white knight, put it in escrow, and we'll co-develop it? And we needed $1.4 million in equity. Come closing day, I had my $700,000 in escrow, and his hadn't funded. And I'm like, what's going on? And he goes, I can't go forward. I don't have the money. And so we had to punt it. We had to kick it, not do the deal.
Mm-hmm.
And it ruined both of our my early reputation, and it destroyed him. And it was like the first clue should have been when we went to put the deposit in, he didn't have the money for the deposit. So when somebody is full of shit and your gut is telling you, so where the lesson is in this thing is that I didn't listen to my gut. My gut told me this guy was not a good guy. I didn't listen to my gut. And see, every time I've lost money, it's because I didn't listen to my gut.
Yeah.
So
your experience is basically programmed your gut to know what to look for.
Precisely. So through those experiences, and I've repeated that mistake once or twice beyond that. So it tells you why I need these really good partners.
Yeah.
And like really dumb decisions at times. But that red flag so that's the first red flag. When somebody is not going to put their money in, they say, I'll do all the work, but I'm not putting money in. Generally, I run. It's like, unless it's so valuable, I'm not going to do it.
Yeah.
The other red flag is when you look in their history. What is their history? Do they have a litigation history? That's a big red flag. If they're involved, if they've been involved a lot in litigation,
mm-hmm.
you want to run because they're litigious. They fight. You can tell they fight a lot. They're self-serving, selfish, self-centered. I don't get into litigation very often. If I do, it's only because somebody's been a bad actor on the other side.
Mm-hmm.
And then I'm going for blood. And I've never lost a lawsuit in my life. I've been involved in 4. I've won every one of them. But it's only because they were acting as bad actors and the judge knew it.
Mm-hmm.
So red flag is, are they litigious? Do they have bankruptcy in their history? Because if there's a bankruptcy, there's a red flag right there. Are they willing to put up money or not? There's a red flag right there. Those are 3 of them that I would really look at.
Okay. All right. And then, so let's talk about, we're making that transition to starting your own business, right? So, think about any could be any business, right?
Right.
Let's say, your first year, make a couple $100,000. Year 5, your business is generating $1 million or more. What is something a business owner should be doing either with their business or with profits, their own money to take the next step, to take the next, is it buying another business? Is it doubling down on theirs? kind of.
So there's a metric called return on equity. And it's literally a function of how much cash, because cash is king, right? I mean, in the accounting world, you can have earnings, but earnings are not cash. That's an accounting term. Earnings is an accounting term. What really matters is cash, right? That's what you pay the bills with. You don't pay the bills with paper earnings. So essentially, the key is to make sure that there's a return on equity. So if your business is throwing off enough cash that it's like, let's call it a 10, 11, 12% return on equity or higher, and you can only get 6% return on the market, plow it back into the business, because you can keep that. If the earnings growth continues, the value of that business is going to keep growing. Mm. So, and the return on equity is literally your net income divided by the amount of cash you put in the deal. So if your business is throwing off a high return on equity, I would tell you to put more money into that business than if the market's only returning 6%. If your business is not returning a high return on equity, you might want to take whatever earnings it is throwing off or whatever cash it is and look for alternative investments that can yield more cash. But cash is everything. Earnings, I said, are everything in public companies because that's how they evaluate the value of the company. But in a mom and pop business, cash is king. And so the more cash you earn, the more cash you can put back to work. And if the market is paying 6% and you can earn 12 on your business, put it back in the business.
Okay.
The other thing I'll tell you is don't buy a business you don't understand. So many businesses, and you see this time and again, companies that are very good in one industry decide that they're super smart. They're going to go buy another business they know nothing about. And years later, it goes bankrupt. And you wonder why. It's because they thought because they were good at this business, they could be good at this business. It's like a guy who manufactures textiles going in and doing AI. He doesn't know anything about AI. So why is he investing in that? And so you just stick with what you know. And
are you, so from that perspective, like from the investing in the business, let's say you're either just going to buy it outright or you're going to maybe invest to help the business. Are you taking your earnings through your business, your ownership, how the company did, or are you taking the cash that the business has, the profits that the business has still to make that investment?
It's called the capital stack. Okay, so what is the best mix of what I'll call debt and equity cash for that business model, right? So when I'm buying apartment buildings, as an example, I'm looking at, okay, if the debt is 3%, which it was, it's not anymore, unfortunately, but it was 3%, and I'm paying my investors 6%. There's a mix there between how much investor equity I want and how much cash I want. And it really, it needs to be modeled out. What is the best return for the investors and the shareholders? And that's especially, it's good to use a CFO, have somebody who's really good at financial modeling to really go through that. Theoretically, I can't give you just, this is the number.
Yeah.
But right now, I'm buying my properties all cash. So my unlevered, which leverage is debt, my unlevered return is somewhere around 10%. Okay, if I put leverage on it, it's probably more like 15 to 20, but I owe money to the bank. I got to pay that debt off, and who knows where interest rates are going to go, and so on and so forth. So now I never bought all cash. Now I'm buying all cash because I don't want any debt. It's just too uncertain with the Fed and where interest rates are headed and all. It's the Fed is going to run a $1.7 trillion deficit this year. And a $1.7 trillion deficit, what do they got to do? They got to go out in the market and sell bonds to raise that cash to pay that debt. Well, that means I'm competing against my own government for cash. And what does that do? That bids up the price of the debt. So I don't want to fight the Fed. Mm-hmm. There's a saying, don't fight the Fed. And there's a reason why, because they can just keep printing money.
Okay. So let's go kind of couple steps back, and let's maybe talk. Probably going to have a lot of listeners that are like me, right? Inspiring entrepreneurs, newer business owners. I mean, I guess I've been doing this on my own for 10 years now, right? But the last couple of years is where I've really taken it serious. I've put more money back into marketing my business to grow, get more clients, right?
Sure.
So I want to keep growing, and I'm not sure entirely what I should do or maybe the best steps, right? So if I give you a scenario kind of where I'm at, right? So I'm projecting probably end of this year, right? After my expenses, this office, what I pay myself in my salary, I'm expecting to probably have anywhere from $80,000 to $100,000
To you.
sitting in the business after everything, right? So my net profit, right? So that's after my overhead, my salary, what I pay myself. And it kind of dictates, because sometimes I do pay myself a little more here and there.
I ask you real quick before you go on,
Mhm.
how much does it take in terms of capital outlay to run the business each year?
Because of the contractors, because most of the high part is, right, my subs that I pay out to help produce content, help produce websites, and then I have obviously all the software that I help run my clients' businesses. Those expenses in themselves are anywhere from, they fluctuate. So I would say anywhere from 60 to 100 grand a year.
Okay.
And then this office space obviously as well. And that's probably in the probably 40 grand a year.
Okay, so it takes you $140,000 a year to run the business.
Yeah.
And does that include your salary?
No.
Okay. So, but you got to take a salary.
Yeah. So I pay myself a minimum salary, and then I'm kind of always pulling out distribution, owner draws
Okay, so
when needed.
would it be accurate to assume that you put probably about $300,000 a year into the business?
Yeah.
Okay, and you've got about $100,000 a year left over in cash flow.
That's what I expect this year. Yeah. This will probably be my biggest year.
Okay, and that's net.
That would
Bottom line.
after my salary. Yeah. And that's paying myself my bottom salary. Yeah.
So I would tell you to keep investing in your business.
Okay.
There's a hell of a return. I mean, that your business is growing at a very healthy rate.
Mm-hmm.
Not only is it growing at a very healthy rate, it's producing a lot of cash flow based on the amount of money you're putting into it.
Mm-hmm.
I mean, what other investment can you put $300,000 on and bring home $100,000 after paying yourself a salary?
And it's a minimum salary. It's a very minimal salary, right? That I'm paying myself. But yeah, I think that's one of the great things about the business that I am in. There is not the amount of overhead and expense to go into operating it is really my time. That's really what it is, right? Sure, it changes, and I guess the time can be, a factor, because if I'm using more time to, say, edit this podcast, right, or edit our content, that's taking away time from my other businesses where, or bring on another client that I can help, right? So time is actually, a very big expense for me, because I have to decide, okay, am I going to use my time, and how do I balance everyone, or do I take that extra money that I have and bring on somebody to help me? But like I think I've discussed with you before, I'm a little bit of a control freak. We've talked about it a bit. Your daughter Brittany and I talked about it. Books about leading and being a leader and a boss, and maybe getting to that point where I feel comfortable that I can mentor somebody and have somebody work underneath me. But yeah, I think to be honest, I've been very careless in the past years with my money and how I spend it, what I do with it. Not, literally having expenses that when I go back and look, I'm like, okay, I spent 10 grand on this software for my business, and I used it twice, and it's like, fuck, that's like, so when I talk about why I feel like where I'm going to be at the end of this year is I've just been so much better at not only acquiring clients, but also, being real with them and like, hey, if you want to work with me, I know the value I bring. Yes, I'm more expensive than a lot of other companies out there, but you're not going to get the service that I bring. You're not going to get me genuinely invested into your business. On top of going through everything that I use to run my business and just weeding stuff out, like, I don't need this. I don't need this. And with software, it's something that if I get rid of it today and I need it tomorrow, okay, I just put my credit card in and sign up again. It's not like I'm not taking risks getting rid of those things. Yeah. So when I talk about where I'm going to be at the end of this year, that's where I feel like going into 2025, I really want to have a plan. Okay, what am I going to take with this money? Should I just keep growing the business, or should I, those things?
So going back to the returns that you're generating, you're generating really enviable returns. I mean, there's not many businesses you can put $300,000 a year into and get $100,000+ a year on the back end. I mean, that's cash.
Yeah.
I mean, so, my advice is don't go buy another business. You've got a business. And one thing I will tell you is that dilution is death. If you dilute going back to your time as one example, you only have as much time as there is, right? And to dilute yourself by buying another company, there's only so much of Steven there is. And so Steven can only really focus on one business at a time. I made the mistake of having 5 businesses at one time. And you know what, Steven? I didn't do any of them very well. Because I couldn't give the requisite attention, the needed attention to the business. So I had to make the decision, which is the core business that was going to make me the most amount of money. So I sold 4 businesses. And, the 5th one has just been a cash cow, the real estate business. I was in the wine business, the wine distribution business. I was in all sorts of stuff. But I really think dilution is death. So, stay true to who you are. Stay true to your business that you've got here. It's generating enviable returns for sure. And how you grow the business, I'm not sure.
Yeah. So, I guess that's the thing, right? Is I think, again, going back to, the money that I do make and that I do bring in, I've talked with clients, I've talked with other people in the industry, and they know that I am on the higher end of the services competitors that provide. But I also know, because I know who my competitors are, and I know that they're not providing the level of experience, the level of attention to everyone's business, right? So when I bring on a new client, I work with them like it's my own business, right? Like if I owned it, that's how I put my heart into it, because I think that's necessary.
Good at.
Yeah. So with that, again, I only have so much, emotional space too, right? To invest in that. And I don't know from a growth perspective, do I want to take on more? I am comfortable in the sense of where my business is at, right? So do I, if I'm not willing to dump that money back in the business, let's say I want to do something else, do I just take that money, pay myself with that money, and then use that to, advance my portfolio in stocks, or use it to maybe start purchasing a second home, a second property, you know what I mean?
It's really just about priorities and really what you want to do. I'll tell you, metrics-wise, and I've said this twice to you because I'm sincere, putting money back into your core business is not a bad idea, given the returns. How you grow that business, the one commodity you have not enough of is time. That's the one commodity that you're going to have to, you can't manufacture more time, right? So you're going to have to pick and choose those customers that are most profitable to your business. And those customers have to be people who, A, share your vision, B, don't over abuse the generosity of your time that you give them. They've got to be people that literally are in sync with how you do business.
Yeah.
And those will be your most profitable customers. The least profitable customer is the guy who's just calling you all the time and picking it apart and bugging the shit out of you. And
yeah, there's a couple of those.
Time suckers. I call them time suckers. They suck the one commodity that you don't have enough of. So get rid of them. Fire them. Nicely, but just say, look, this is not working out.
Yeah, and that's perfect. I had a client where that's kind of been the thing. They've been, I talked about it after our meeting. They paid 10% of my revenue, but I was giving them 80% of my time. Well, I did have that meeting with them, and they're paying much more part of my revenue now. But I've also been able to kind of get rid of some of my smaller clients that they're in a position where they don't need to necessarily pay for my service. I've taught them how to do a lot of things, but it's opened up that extra time that makes sense for the value of what that company's paying,
Sure.
right? So it has made sense. We had a discussion and it made sense for all of us. And I don't feel so, taken advantage of now because I feel like I am being fairly paid for my.
So did you basically adjust your pricing with them?
Oh yeah, I doubled it. Yeah.
Good.
Yeah. Because I felt like I had doubled my time over the last 6 months.
And it was just a conversation, right?
Yeah, and they know the value I bring. I do generally enjoy working with them. I see the potential I can make from them much greater because they're entrepreneurs. They want to grow their business, and I know as they continue to grow, I'm going to grow with them and make more. So I 100% see it's an investment.
Great investment, Steve.
Yeah.
So that's how you grow your business, based on core customers. It's all about the core customer, right? Knowing who your customer is that fits the profile of the business. So you've now made a decision to invest in this client because you know it's going to be profitable to your business.
Exactly.
And you've rectified the time-sucking element that, believe me, they knew that they were getting a hell of a deal.
Yeah.
And they didn't come to you and say, hey, Steve, we really think we should double our fees.
Yeah.
Nobody's going to do that. So good for you that you went and got what you were worth.
Yeah.
That's a critical component. A lot of entrepreneurs undersell themselves, because they're afraid to ask for more money. But it's really about the value you're providing. And you're a high service business. Mm-hmm. You're intensely and authentically into your customers. That's worth a lot more than just dollars and cents.
Yeah. Yeah. And I believe that because I believe with the advancements in AI and automation, anything in customer service, you go on somebody's website, it's an AI fucking chatbot, it's anybody that's smart realizes they're not talking to a real person, and it's frustrating, right? But that's where we're going. And so most of my clients provide a type of service, right? They're not selling products, they're services. And a lot of these companies are getting into this. They're using automation to answer questions on their website, to answer questions on their Instagram. And I feel like this is where my clients are going to have a big advantage down the road because I think everyone's going to be investing in their business because they can save a lot of money. They don't need to pay an assistant or even a VA to do this anymore, right? They're going to have AI automation. But where I feel the businesses are going to thrive are the companies that say, you know what, no, we're going to double down on authenticity, right? We want our customers who are going to spend $200,000 with us to talk to a real person and to know they're speaking with a real person. And I think, it's going to cost the business more money, more time in the beginning, but I think those businesses are going to win. I think with everyone using AI, authenticity is going to become the king of marketing down.
So you're basically saying authenticity will trump AI.
Yeah. And I would say if we're talking, cosmetics, right? A website that they're processing probably 50,000 orders a day or more. No one can handle that. Yes, AI is going to be essential for running your customer support. But in my clients who, they are going and they're doing $150,000, $500,000 kitchen remodels and ADUs, like that customer is spending a lot of money. One, the time to acquire that customer is very different than a small product, right? Your time with that customer is very different. So that customer deserves to feel like they're being treated like a human being. You don't treat a human being with artificial intelligence, right?
Well, yeah, and it's really, I tell this to people all the time, I'm not in the real estate business, I'm in the relationship business. Mm-hmm. Real estate is just my product. And I think that's what you're saying, is that realistically, the businesses that are going to thrive and do well, of course, automation and AI is going to play a role in a lot of that. And that's fine. But when it comes to transacting and creating new business, it's really about relationships and authenticity.
Yeah.
And if you have those two elements, you're going to be successful. And that's really what you're saying.
Yeah. I mean, and it goes right into what's happening right now, right? So right now, especially with social media, it's about building your personal brand. And it's not just building your personal brand of the person behind the business. It's building your personal Instagram, your personal YouTube, right? So you have these businesses and you're behind camera there, but also you have other things that you can talk more candidly or organically about, right? And the customers that come into your business or come into you are going to go to the other one, right? And we've seen that the businesses that are much more, the owners and the people that are on the front lines that are much more open to building their personal brand within their business are becoming much more successful. And the reason is because people are on social media. They're on it all day long. And so not only are they learning about your business through brand awareness, right? They are already inevitably building a relationship with you before they even meet you, before you even come to their home, right? So that trust is there. The authenticity is there. And so I talk about it a lot with all my clients. If you want to survive, you have to do it. You know, that you're not going to compete in a market where consumers don't know who they're going to be working with before they meet them. Customers are expecting that now. And I love that. I think a lot of, particularly people in my client space, the competitors, a lot of them don't want to do it. They don't think it's necessary. They don't
think the human contact is necessary.
They don't think like social media is necessary for their business, right? And I love that, because if that's their feeling, if they think they're going to live off the referral world or just posting a couple photos, I love it, because I'm going to come in with a client and I'm going to just dominate their industry, their space, right?
Yeah.
Every company that I've worked with, so I've built 5 different construction companies in the last 10 years. Every one of them grows every year and is doing better than companies that were there 10, 15 years before them. And it's because those competitors are dinosaurs. They haven't taken the leap into social media. It's really easy, and you don't need me or an agency to do it, right? Business owners can do it themselves, but it comes in 2 things. It's stubbornness and fear, right? And I understand the getting behind camera is the hardest part, right? It's understanding, just like, hey, I got to let my guard down and just do it. But I think for any business owner, I think it's absolutely essential. And that's a part of what I was talking about with going back to the AI and automation is, if you're going to rely on that and rely on not using your face or who you are, I think you're just not going to have the opportunities that the businesses who put a little more personality and direct contact with their customers are going to have over you.
I think that's 100% right. It's really about relationships.
Mm-hmm.
You can automate a lot of the what I'll call standard operating procedures of a business.
Yeah.
The product off the shelf, loading it on a truck, whatever. That's fine. There's a place for that, a very good place for that, for efficiency and profitability and bottom line earnings. But when it comes to acquiring new clients, it's going to have to be, it's in the trenches. You got to be on the ground, shaking hands, and meeting people face to face and building a relationship like we have.
Yeah.
I mean, it really is about relationships. I can't think of one business that grows its sales by just AI alone. Maybe there is, but I can't think of it.
Yeah, I think about I've talked about this with relationships, right? And relationships should be the same of what a customer expects that relationship to be. And so going even further, you're on camera, the business owner's on camera talking about their product, their service, and people are building that trust with you, right? They like your personality. They think they want to work with you. Just like employing AI to do things might not be the best route. It's also same with businesses, right? That you're going to go and hire a salesperson, right? The person that's going to go and meet that person, right, at their home to sell them a job.
Sure.
If that person doesn't align with not only your brand, but seem like somebody that the person that they saw on social media would generally hire and work with, they're going to be so caught off guard, right? So you're building your personal brand. The customer's going to know that. So if you're not the one going to the door, you better damn well ensure that your salespeople reflect you and your business, right? If you're fun and exciting, but your sales guy comes and he's, rigid and cold, the customer is going to be like, they're still going to be like, wait, is this the same company?
But see, what you're talking about is culture.
Mm-hmm.
And culture in a business is the lifeblood of the organization. So when I was telling you, I think you should reinvest in your business, I'm talking about replicating Stephen.
Yeah.
So literally, it's in my world, it's all about culture. It's about, my goal is to make sure all my employees get rich, make sure my shareholders get rich, make sure everybody gets a wealth lifestyle that they've come to my company to work for. They know that that's what I'm about.
Mm-hmm.
I'm about making as much money as I can for my employees and myself, so I can give it away and help the universe. But that business, our businesses are growing exponentially because I have people dedicated to getting on the phones, arranging meetings, face-to-face, contact, and then they build the relationship. That's how we get our clients. And repeat business is so much more profitable than having to acquire another customer. Customer acquisition costs in my business are ludicrous.
Yeah.
It takes years and time for that, for a company to hire me to go roll out all their stores across the country.
Yeah.
I mean, for them to trust me. So the customer acquisition costs are extensive, but the profitability, once you get them, is huge. But that's not because I'm about AI. That's because Matt goes out and meets with Charlie, the CEO, and says, Charlie, look, you can trust me. AI can't do that. And so, to your point, replicating you and growing your business necessitates that you hire more people like yourself, like-minded people who are committed to your vision and to your culture. And my culture is fun. I make sure in my company that we're having fun. So my first question isn't how much money are we making. I walk in every morning going, are we having fun? Are we having fun, motherfuckers? Because if we're not having fun, we're going to shut it down.
Yeah.
I don't care how profitable it is. If we're not having fun, we're done.
Yeah. If your employees hate their job, they're not going to make you money. They're not going to come to work and be motivated or excited to go beyond what is on their job outline, right? Because the best employees are people that are always looking, how can I do more? How can I bring more?
Well, see,
right?
In my business, I mean, the average tenure of a employee in my company is 20 years. People don't leave Hessen and Holdings. They don't leave Green Sands. They just don't, because they get treated so well and they are so overcompensated. By the way, I mean, so let's say that my theory is pay 20% more than the market. So if the job's a $100,000 a year job, I pay them $120 plus bonuses. You think they're going to leave me?
Yeah.
No. So they're sticking around. Then I give them an ownership percentage in each deal we do. So they make more money. My assistant makes a fortune. She isn't going anywhere. And you know what? She is the best of the best. I hire only the best. I pay 20% more than the market. And my turnover costs are zero. And turnover costs in a business will kill you. Mm-hmm. Because the customer's got to get used to a new guy coming in. You may not like the guy. You may lose the business. Shit goes on and on and on.
And the business you have with that person might have been retained because of the person working directly with them.
Because he's built a relationship with them. And so to lose people because they feel like they've been cheated out of, a fair salary is absolutely fucking stupid. But businesses do it. Here's the other thing that drives me nuts. You see these companies' sales are dropping. Who's the first people they cut? Salespeople. What? So your sales are dropping, so you cut your salespeople? I mean, the average person on the street knows that's moronic.
Yeah. I
mean, cut the fat in the overhead in the corporate office in the C-suite, but don't cut your salespeople. But inevitably and invariably, they cut the salespeople.
Yeah, they don't want to cut their bonuses. They don't want to cut the fat end of the year bonus. Even if the company has losses, they still want that bonus.
Oh, yeah, man. It's unbelievable. I remember when GE, Jack Welch left GE, and Nardelli went to Home Depot, and all these other guys went to Albertsons and so on and so forth. And they fucked up those companies so bad. And they got these huge parachute $50 million exit fees. So they got paid for failure. I mean, that's how corporate America does it.
Yeah.
They set it up so the CEOs and the board of directors and all the executives have parachutes. The average worker is working to the bone, has nothing. My company, that ain't the way it is. Everybody, all the way down to the janitor, has ownership in my company. And you want to know what? They behave like owners. If you pay them like owners and you treat them like owners, they're going to behave like owners. My people are working Saturdays. I have to tell them to stop working. They run to the office, with their hair on fire because they know that they can make as much money as they want.
Yeah, that's awesome.
It's just a great culture. And every business I built, I've done it that way. And I think that's the key. And then the relationships and the turnover costs are zero. And the customer acquisition costs are high. So I just want to keep my existing customers because it's so profitable.
Yeah.
I don't need more money. I make more money so we can enrich people and
help other people. Yeah.
And change the world.
Awesome. Well, I want to kind of end this with I think an important part. We're talking about employees. We're talking about starting a business. And I think this is a question I've had, my clients have had. I'm sure people listening have this question. What is your thoughts on hiring family when starting a business? And I'm talking direct family. I'm not talking, second cousin down the street. I'm talking people that you have a relationship weekly, monthly. Like, these are people that you're going to see every Christmas dinner, right? So what's your thoughts on that?
Nepotism is what I call it.
Yeah.
That was what it's called. Hiring family. It has not worked out well for me in the past. I make exceptions. Brittany's an exception because she's so smart and she's so savvy. She has a lot of moxie, and she's able to make that line of demarcation between now it's family, now it's business.
Yeah.
But generally speaking, I don't think it's a great idea because, boy, does it make for uncomfortable conversations. I mean, I've hired my nephews, I've hired family, I've had to fire them, and you know what? It just makes for a very tough future together in your relationship with them.
Yeah, and I agree. I think especially for a new business owner, right? And most of my clients, when they start their business, family is like usually who they go to. Everyone, wants to come work for them. They obviously see the money that they can make in the space, so everyone wants to get in, right? And so what I have seen is because you're a new business owner, right? You're not seasoned. You haven't had to be a boss or a leader. What happens is they bring on a family member, close family member, right? And the person just isn't performing. And what ends up happening is because myself or anybody or these people in this position, you're afraid to fire them, right? You're afraid to do what has to be done because you're risking severing the relationship. But what ends up happening is by not doing that, your business suffers. And it continues to suffer over and over and over. And people, because they're so scared to be a leader or a boss, they're willing to sacrifice their business, which is probably the only way they're going to be able to continue providing for their family by not firing their family, right?
100%.
And so, I love my family. I love, my sister, my brother. Yeah, like there's just no way. I know I can be a difficult person to work with sometimes, but yeah, that would be, in this stage of my life, let's say my sister came to me, wanted a job, right? She has kids. The emotion I have attached to that, to having to fire my sister. No, I would probably be one of those people right now in a situation where my business might be suffering because I am genuinely afraid of ruining my relationship with my sister, right?
And that is a very common problem.
Yeah.
I will tell you that in my world, I think about if somebody's not doing a good job, they spiritually and emotionally and intellectually know. They know. Like if you have sales quotas and you're not hitting them, you're not hitting them. And so terminating employees, generally speaking, who aren't performing is the kindest thing you can do for them. If you do it in the right manner, in a loving way, and you let them go and say, listen, it's not working out. I want what's best for you. This clearly isn't the path that Congress has chosen for you. I want you to go and find your passion. And you do it and you give them a nice severance check. You can preserve that relationship.
Yeah.
But it's all in how you handle it, right?
And it's the difference of being a leader is how you handle it.
It's how you handle it. And I will tell you, it's better to do it quickly than drag it out.
Yeah.
Because it causes just so much angst.
Yeah, I agree. I absolutely agree. So like I said, I have some clients that have some family members or friends, even friends that work for them. They're helping them out, but they just don't bring value. And it's not my place. It's not my place to tell them, because I don't want to ruin my relationship with them because I tell them their brother-in-law is a shitty employee for them. But yeah, I see it quite a bit.
Again, the challenge for that though is if you don't share your thoughts with them, you're doing them a disservice.
Yeah,
and it's going to affect your business down the line because they're going to go bankrupt or whatever.
Yeah,
and then you've lost that client.
Yeah.
So a thought might be, You sit down with them and say, listen, you know what, he's not performing, and I love him to death. Nothing personal, but for your benefit, I think you need to make a change. And you know what? He said what he's going to do, but at least you were honest and authentic, and I think that's the key.
Yeah.
Yeah.
Cool, Matt. Well, I think that's probably a good segue to end on.
Perfect.
You know, on family, right? So I know you kind of like to end podcasts with your own questions too. So did you have any?
Okay.
We talked about beer.
Have you tried any new beers this week?
So I'm actually not drinking right now. So, well, I should say not drinking, right? So, my wife and I are doing our current 30 days sober. But I'm putting not drinking in quotes because we've been trying a lot of non-alcoholic beers. And two that I have to absolutely recommend because they taste like beer and they're really good. Trail Pass from Sierra Nevada. It's a non-alcoholic IPA. Trail Pass. Really good. It tastes like a standard West Coast IPA. And then probably my favorite is called Just the Haze, and that's from Sam Adams, and it's a non-alcoholic hazy IPA. Man, it's pretty good. Especially it's got that fruity flavor. So when you're out in the sun, a hot day, really good. And then my wife really likes the Corona. Not the non-alcoholic Coronas. Yeah, so when I say we're not drinking, we're still enjoying some non-alcoholic beverages.
That's what I'm doing right now. That's what's really interesting. I'm going alcohol-free, and it's amazing how many great alcohol-free products are out there now. But what's weird is the bars don't carry them.
No, yeah, it's
they'll carry one beer.
Yeah,
and that's it. Heineken Zero, and that's it.
Yeah.
But there's so many good ones out there. So you know what Black Swans are, right? Black Swan event is unforeseen, something totally unforeseen that might occur in the economy, might occur in politics. So let me ask you, as you look at the world today, you look at your business and you look at the economy, do you see any black swans on the horizon that the people aren't thinking about? Something that might...
I mean, obviously AI, right? AI it's really, really scary. And AI right now is really just, it's using what information is already available to provide answers or provide services. It's not thinking for itself. But that is coming faster than...
So we don't know what the outcome of that is going to be.
Yeah.
It could be dangerous.
So and this is what worries me is, especially like you've probably seen like the Apple Vision Pro that came out where people like you put on this mask and it's like, it's a computer and you can work all over, you do all these things. I think it's fucking stupid. I just think the idea of being in a room with other people and having something over your face, like just weird. But we're getting more and more into where AI is getting so good at creating an augmented reality, right? This virtual world, right? There's already, I'm sure you've probably heard, there's an app called OnlyFans. It's an app where, women or men sell, pictures of themselves, where there's literally AI generated bots, whatever, that look like real people that are making money on this. So businesses are creating AIs of people that aren't real, and people are buying it. They know it's not real. They're buying the product, the porn or whatever it is. That's what scares me, right? Is this idea that we're eventually going to go into this where so many people, they're not going to want to live in this world. Their world is going to be, the augmented reality. I'm really worried about what the repercussions of that are going to be. So I think when we break into really where people can sever, I guess maybe sever their consciousness into something else, right?
Wow.
I think that's closer than we all expect. So
that's scary.
I think that Black Swan event is when that happens, right?
That's a great one.
Yeah, it scares the shit out of me. I hate AI. I hate automation. I hate all this stuff. That's why it's like, we've seen this resurgence in like people, like record stores, right? People buying record players and going back to buying vinyl. Like, I love that, right?
I love that.
I love print. I love a lot of magazines have come back, I hated COVID. I hated the fact that I was stuck at home, that I couldn't go to a bar. I couldn't go to a friend's house and engage in person with people. I hate Zoom meetings. if it's a lot of it's necessary. But me personally, I think meeting in person is it's absolutely necessary, and I enjoy it because the people I'm meeting with, I have relationships with.
Yeah.
I don't. There's just a difference in how you talk with somebody from a computer to being face to face.
Well, and it's also like you take text. If you're going to tell somebody to fuck off, it's much easier to do it on a text fuck off.
Yeah.
And there's no repercussions.
Oh yeah, keyboard warriors, right?
If you were face to face with that person, you would never say that.
Oh yeah,
you'd be much kinder and gentler. So I agree with you. I think all this AI and beyond all the downsides of it, which we don't even know yet, right? To what you're saying, I think people are relying on it too heavily.
Yeah.
Like you said, to grow their business, and it's not going to work.
Yeah. I mean, what happens when, I'm sure it's happening now, but when AI is so good at predicting the stock market, curious what's going to happen. What happens when it's just standard, like if you want to make money or you want to avoid it, because if it's so good that it knows predictions down to 99% and all of a sudden it's telling people like you got to sell, like how is that going to change, the market, right? So things like that, like what are the repercussions and stuff like that?
Shorter territory.
Yeah. Yeah. So
Steven, great to see you.
yeah, you too, Matt. Thank you again.
Thanks, man.
The next one is excited.
See you then.